Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Tuesday, the 16th of August. Starting off with the FTSE 100, where it's a bit of an oh dear situation. We've had that, I suppose, a mini head and shoulders situation there since the end of June, and breaking the neckline there around 74.37. Below that, the risk of a retest of July support below 72.50. And now see that the 50-day line is falling, which is not great. And probably the 200-day line will start curling down as well, which will not be a good look at all. But at this stage, only back above that 74.37 initial August support, really delaying or turning around the bear scenario. Worst case is that we head to the bottom of that falling trend channel from back in February at around 71.50 by the end of this month. Moving along to the DAX, and here there were fears this was rolling over as well, just about clinging on to that 1 year trend channel. Obviously we are slightly blurred, but obviously depends where exactly the line is. 15,700, the initial support that this market's found. Below that, obviously July support around 15,400, and then maybe the most likely scenario now is a test of the 200-day moving average at 15,300. Only back above the 50-day line up there at 16,000, really delaying the rollover, potential rollover that we're looking at there on the DAX. On to the Dow, which was trying to resist the negativity on this side of the Atlantic, but we were fearing that 34,600 former June-July resistance would come in as support, and that on a break of 35,000, and the 50-day line also there as well at that level in the mid-34,000s. Maybe a scenario has to be factored in where we would head to the bottom of that channel from this time last year, and the 200-day moving average around 33,600. But at this stage, maybe it's sensible just to go for the 50-day line, as that has supported this market since the beginning of June. On to Bitcoin, and here the sideways shuffle continues below the falling 50-day line, which is obviously not a positive. 28,400, the old resistance back in May, and the risk now also moved down towards the 200-day line at 27,200. We need an end-of-day close above basically 30,000 and the 50-day line to give us a chance of then resuming the bounce that we've seen in this market since the turn of the year. On to the stocks, and not much in the way of fireworks at the moment. We've got Abingdon there, which actually is delivering a bit of fireworks, in the sense that we've had a bear trap rebound, bear trap gap reversal from below that initial July support there at 9.5 pence, and we're just breaking yesterday's gap up day, which is normally a good sign. So initial target here around 13.5 pence, an end of day close above that, and we could be looking at 20 pence maybe by the end of next month, perhaps even sooner. But a good signal there with that bear trap gap reversal and support coming in above a rising 200-day moving average. Stock that I was flagging as a potential turnaround situation is Beacon, and it has so far come to pass. We've broken out of that falling wedge there. There wasn't much charting data to go on, but we still went with it anyway. But break of that resistance line there around 8.5, let's say, and above the 50-day moving average at 0.09. We're looking for the top of that broadening triangle there from back in April, as high as 0.14 pence. It also ties in with the 200-day moving average. Hopefully we'll see that by the end of this month, given the bear trap gap reversal that or at least the gap reversal that we've had for Beacon. Moving along to Belluscura, which came up with a decent RNS today, big sales, etc. And here we've got what looks like a rising trend channel base, and we were looking for the shares to basically get up to the 53 pence level. We've just missed it today, so maybe we'll have another go tomorrow, or maybe the next day, given that we've come back from that. But at least while we're above the floor of the gap at 37 pence, looking for 53 pence by the end of this month, or hopefully a bit sooner. Moving on to the next situation, which is Creo, which doesn't get much coverage anywhere apart from here. So here we have it. We've got a sort of sideways shuffle above the 200-day line. That's around the 29 pence area, and nice bounce, a ricochet today off the rising 50-day moving average at 32 pence. Above that 50-day line on an end-of-day close basis, we're looking to the top of that rising trend channel from December, as high as 45 pence by the end of next month, and maybe a bit sooner. But that extended bull flag, as I would call it, sort of saucer-shaped bull flag, looking very strong indeed, surprisingly strong in this market. East Imperial is the next on the list, and here we can see that shares consolidating after that push through the 200-day moving average at around 1.8, and above that 200-day line, looking for not only 2.5, as we already hit that target line there yesterday, but also up to 3.5, maybe as soon as the end of next month. But an end-of-day close above 2.5 is what we're looking for to give us 3.5 on East Imperial, and upside valid while we remain above that 200-day moving average at 1.8 pence. The stock where there's been some stake building by a high-profile investor is eEnergy, and we're getting tantalizingly close to the top of that rising trend channel from November. That's around 7.5 pence. End-of-day close above 7.5. We're looking for 10 pence by the end of next month. So it looks like a nice turnaround there. I'm just waiting for that 200-day line to start curling up, and that should probably give the stock a bit more momentum. On to Hummingbird, which seems to have delivered a decent rebound today off the 200-day moving average, rising 200-day line. We've got a bullish divergence line there as well, so that should hopefully give the shares enough momentum to get up to 14 pence, ideally by the end of this month. Upside valid while we hold above that October uptrend line from last year, around the 10 pence mark, but initially looking for 14 pence on Hummingbird. IX is on track here for the as the next stock to look at. IX Net Zero. What was a lovely concept that is. Here we had we've had two unfilled gaps to the upside, in fact three, since April, and also had a rebound above the rising 50-day line at 20 pence. Above 20 pence, looking for 30 pence, hopefully by the end of this month. Big picture target as high as 45 pence, maybe by the end of next month. But a nice turnaround there with those three unfilled gaps to the upside and the bear trap gap reversal that we had back in April. A decent situation now coming up with Light Science, which I've given a lot of coverage to, and second time lucky in terms of hitting that the top of that broadening triangle from back in April. So that was around the 2 3/4 pence level. Above that, we're looking for 4 pence by the end of next month, maybe a bit sooner, to fill that gap down that there was from the beginning of April. But a nice turnaround there, and we've got the situation powered by that rising 50-day line. Just need to get through that 200-day line around 2.9. Hopefully that will accelerate the build-up there. Moving along to Lunglife, and here the shares still inching up. Great rally here. We had the gap close buy signal the other week. That was the second. The rally here started with a bear trap gap reversal around 20 pence. Gap close buy signal last week, and then above the 200-day line now at 73 pence. We're looking for £1 as soon as the end of next month, which would take the shares back to where they were back in February, which would be obviously great for holders. On to Poolbeg, where the market seems to have caught on to my personal excitement regarding this being a great AI play, one of the few proper ones on the London market, because obviously we don't like technology stocks for some reason. Here we've got this share's just about to break that line of resistance there from November at 8 3/4 pence. Above that, we're looking for 12 pence by the end of next month, hopefully a bit more, with that uptrend line in the RSI window as well, backing the move higher. And the 50 and 200-day moving averages both rising too. So this looks like a slow burn, but a strong one on this situation. And we're pretty confident in the upside while we hold above recent support around the 7 pence level. Debut for the next stock now, which is Pod Point Group, a company which I'd never heard of before. And here you can see that we've had a neckline break after the rather sharp falls of recent months. The neckline there around the 33.7 pence level, so call it 34 pence, above 34 pence, looking for the shares to fill that gap up to the 47 pence level, hopefully over the next 2 to 4 weeks. And even if we retreat after that, that's where it looks as though the shares could get back up to while they're above the 34 pence area. Just a couple of stocks to go now. First is Rainbow Rare Earths, which gives the impression that it's ready to break higher in quite a significant way. We had a gap down last week and gap higher this week, so it's an island reversal, bear trap island reversal, and looking for obviously a retest of last month's 15 pence resistance, ultimately hopefully up to the 18 pence level by the end of next month or sooner, while we remain above recent support at the 12 pence level. Finishing off with T42, and here looks as though the shares are just ready to break that resistance line from the end of back in September last year. If they can do that around the around the 6 pence, 6.25 pence level, we're looking for a retest of basically the 8 pence area, which is the proper post-November resistance for the shares. Obviously, we had that spike there back in May, but above 6, looking for 8, while we will remain above the 50-day line at 5.3 pence. That's it for me today. More updates tomorrow.